What's going on, everybody? Travis Witherspoon here, Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is your exclusive trade of the week. If you're a part of the mailing group, remember you end up getting two, especially if we end up having trading pairs that have potential energy to be able to move toward the upside and the downside and possibly be able to make you money. So, the second trade of the week for May 31st to June 4th is going to be the dollar Swiss franc. Now, let's talk about this in general. This market has been completely bearish, and it's been bearish for a while now, which means that the market is being oversold. That gives us potential opportunities to be able to start looking at buying instead of selling with everyone else. When everyone else is very fearful of the market moving down, this is the time that we need to pounce for us being able to go in and start taking a look at opportunities. Now, you take a look at this from an overall weekly perspective, it is very clear that the market has been basically bearish. We've seen a downtrend, and that downtrend has happened since the market was at 95, and it's done went all the way down to 89 for its overall movement. So if you sold it, then absolutely, you've made a lot of money. But at this particular point, what you're going to end up noticing based off of the weekly and based off of the daily is that the market is extremely overbought, and this gives us some opportunities to be able to get back in and start being able to buy, at least from a short-term perspective to a mid-term perspective for us being able to get in. So let's take a look at this from a weekly perspective. We have that falling wedge that ended up happening when the market started to push back up and went to 94.70. Now, the market is in this ABCD swing where the market has retraced all the way down to the deep 786, which is this green line. And on the weekly, there is no fractal high as of yet. So that's one cause of concern, but keep this in mind. We look at three things to be able to give us entries. We look at time frame alignment, we look at overbought and oversold conditions, and then after that, we look for some type of momentum. Momentum when it comes down to the average directional index, momentum when it comes down to our overall entry strategy. Now, from this overall perspective, this is the lowest value that you can be able to get when it comes down to risk versus reward. That's the reason why I'm actually bringing this to you for being able to get in, because even if you lose off of this opportunity, you're losing very little to be able to go out there a lot. Now, from a weekly perspective, we can see that if this market basically pushes up from this 8-6 position and keeps on going toward the upside, the overall expectation is that the market will end up going up to 95.80. And 95.80 is the long-term de-extension or your take profit 3 that you're going to end up looking for this overall movement. Now, let's get into the daily and talk about why I'm so interested in being able to get into this overall market. If you look at it, that same counter trend line break that has happened from this overall movement has broke a counter trend line break, and we do have a fractal low at this particular point. Now, we have our breakout right here. We have our long wick where the market basically end up moving up and buyers basically end up taking profit from a short-term perspective. Now, remember, whenever there's a breakout, there will always be a retest. When you look at the retest, we can look at that from a 2-hour perspective, and what we're seeing is this. We have our large candlestick wick that end up going very high at this particular point. We end up having basically a dark cloud cover. They end up happening right here in this bearish candlestick, and all we're doing is just waiting for this candlestick to give us some opportunity and basically remain to be below this purple trend line, and then after that look to be able to break up. As long as it breaks up without breaking this overall purple trend line to the downside, this one right here, then we have an opportunity of being able to get in. Now let's talk about the 3 positions that I will look at being able to get out at when it comes down to this. If you're a short-term trader and you're only looking at being able to get into this and get out, the first move will end up being to 90.50. 90.50 is the 2-hour de-extension for the overall movement. That will be your take profit 1. If you're looking at being able to get in for take profit 2, which will end up being your daily de-extension. Your daily de-extension is at 94.70, which is, once again, green goes to green for this overall movement. We see the market basically retrace from this overall area. We expect that this market is going to go up here for your daily. Now, remember your your 2 hour is going to end up going right here. And then remember your weekly, in which we end up talking about, in which this will end up taking maybe a couple weeks to a month. This will probably end up taking maybe like 3 to 6 months of overall movement. That movement will end up taking you all the way to 95.80, which is the overall expectation of the long-term de-extension movement. So this is a trade that you can be able to get into, be able to ride out for a long time, be able to set and forget, place in 3 different entries, make sure that you lock in profit along the way, and then after that, keep on going from there. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. If you like also being able to get these exclusive deals when it comes down to trades of the week, please make sure that you end up sharing this video with somebody else so they can be able to get the same thing. Now, this has been our trade of the week, which was the U.S. Swiss franc.